Estee Lauder has declined more than 60% from their all-time highs after the sales have dropped from pandemic highs. Growth investors have abandoned the stock because of falling operating numbers, and value investors are also still standing on the sidelines. Estee Lauder is trying to turn this trend around, and with a focus on R&D, they want to stay relevant in a constant changing beauty market, where, according to McKinsey, structural and competitive dynamics are shifting on multiple fronts as we speak. If they can succeed in turning the business around, Estee Lauder's current high dividend yield might make the stock attractive for investors who seek to build a passive income. In this video, we will dig into the business model and the markets of Estee Lauder, analyze the strategic positions by doing a Porter's 5 forces analysis, and have a look at the latest financial statements to see how they are doing. We'll also check the valuation and do a discounted cash flow calculation. In the end, we will see if Estee Lauder is a good long-term investment for us or not. Estee Lauder has the ticker symbol of EL on the New York Stock Exchange, and they are working in the consumer staples sector. They were founded in 1946 and have around 48,000 employees. Their headquarters sits in New York City, United States, and the market cap sits around $52 billion at the moment. Estee Lauder is a manufacturer of makeup, skincare, perfume and haircare products. They own many well-known brands in these segments that you can see here, like Origins, MAC, Bobbi Brown, and of course Estee Lauder. And they sell their products all over the world. Based on sales numbers, they are the third largest player in the global beauty industry with strong brand recognition. The travel retail business especially, that is shops and airports, train stations and so on, is very important for them. Their strategy includes growing their existing brands organically, but also keeping the watch out for new interesting products for merchant acquisition. To stay ahead on this constantly changing beauty markets where a lot of innovation and R&D is necessary, they are also putting a lot of effort in the research and development department here. You can see these are just a couple of the disciplines that they are researching in, and it's not only product related like the analytical science, safety related, it's also process related like imaging technologies, scale-up development, formulation and so on. And they are also trying to improve their packaging design and efficiency. When we look at the split of the different segments that Estee Lauder is operating in, we can see that they make more than half of their sales in the skincare segment and almost 1/3 in the makeup segments. So even though they are working in very diverse sectors, they are heavily concentrated on the makeup and the skincare sector. If we look at the sales by region, we can see a very even split between Americas, Europe, Middle East and Africa, and Asia Pacific. It's almost a 1/3 split for each of the regions, so this looks quite diverse. When we jump into a bit more details of these numbers and compare the sales numbers with the operating income, we can already see the first problems here. For example, if we have a look at the skincare segment above here, which was the biggest segment and the net sales are actually quite high. When we look at the operating income, we can see that especially in 2023, the operating income is comparatively low. Here we have even a higher operating income in the fragrance sector, and we can also see that on a year-to-year basis, the operating income only in the skincare sector alone declined by 22%, and the total number declined by 11%. When we look at the operating income numbers, it gets even more severe. Here we can see a decline of the total numbers of 85% on a year-over-year basis. The same is true if you look at the geographic split. Here we can again see that the biggest market at the moment is the European, Middle East and Africa market. But we can also see that the decline on a year-to-year basis was the highest in this sector. And if we look at the operating numbers, we have again decline of 85%, and the Americas region even made losses in the last fiscal year. There are currently many interesting trends and changes going on in the beauty market right now. And if you look at this report from McKinsey, for example here, we can see that the overall beauty market is expected to grow with a total CAGR growth of 6% until 2027. The individual segments here are very similar. The growth rate is very similar for all of them. But if we scroll down a little bit further, we can also see that McKinsey expects here a premiumization of this market. And that basically means that the premium brands in this market have a higher growth rate of around 8% compared to 5% in the mass beauty market. As Estée Lauder is working on this premium sector, they might benefit from this slightly higher growth rate compared to the overall market. If we look down a bit further, we can also see that McKinsey identified 5 disruptive themes here. The first one is the regrowth of the growth map. That basically means that the growth in China is slowing a little bit, and the Middle East is actually expected to grow the quickest over the next couple of years. The second trend they identified is the rise of wellness, and this basically means that the consumers are looking more for beauty products that blur the lines between beauty and wellness and combine both of these together. One example they mention here is, for example, these LED face masks. The third trend they have identified is the rising influence of Gen Zs. And here they state that Gen Zers are more looking for companies, for products that fit to their specific cultural ideas. That means they also have to take care of sustainability, diversity, and inclusion. Gen Zers value brands that have an approachable image and a good story that goes beyond their products. The fourth trend is the imperative to scale. And here they state that most of the brands that have been founded in or after 2025 are still growing and have not grown as much as they would have been expected to. And to scale successfully, brands must focus on an omnichannel expansion and internationalization. The last trend they have identified here is the recalibration of M&A. Here they state that M&A will still play a major role in this industry, but the deal makings will not be the same as in the last couple of years when the cost of capital was quite low. They forecast here that the M&A targets will shift from high growth, independent, trendy brands, so to say, to brands with a more innovative product pipeline that have already demonstrated the ability to grow. But with all these changes and all these trends going on right now, we can see that this beauty market is a very, very fluid market at the moment. And it still needs to be seen if Estée Lauder can play a significant role in this market in the next years. When we look at the strategic position of Estée Lauder by doing a Porter's 5 Forces analysis, we can see first of all that the threat of new entrants is quite low. The capex costs to manufacture and produce these beauty products are quite high, and it is quite difficult to efficiently produce these products with maybe even a cost advantage. So the bigger established companies in this market already have quite a good advantage, especially when it comes to production manufacturing costs. The threat of substitutes, I would say, is medium in the sector. First of all, you cannot produce these products at home by yourself. You have to buy them. There are alternatives available on the market for most of their products, but especially in this premium segments, it's not that many. And with the name and the brand value of all the brands that Estée Lauder has, they definitely have quite a good position here. On the other hand, the switching costs are basically not there. So if somebody wants really to switch to an alternative product, the barriers are not so high. The competitive rivalry I would expect as quite high. There are a couple of big players in this market, for example, Unilever, Maybelline or L'Oreal, and they compete with their products against each other. Again, the switching costs are basically not there, so they are really competing for market shares. They don't always have the same products, but they have slightly different focus areas, but still in the overall market, they are competing against each other. The bargaining power of their customers is medium to low. First of all, they are selling to consumers, so it is definitely price-sensitive products, but as they are targeting the premium users and the premium and luxury segments, the price sensitivity goes down again. So I would say it is something between medium and low. The bargaining powers of their suppliers, on the other hand, is quite low because they are only using commodities as raw materials to produce their products. And these commodities are readily available, easily available from different suppliers. And Estée Lauder can basically choose their own suppliers according to the best price. Overall, Estée Lauder seems to have quite a good strategic position in this beauty market. When we look how the stock of Estée Lauder has been doing over the last couple of years, we can see first in the last year, it was underperforming the S&P 500 quite a bit. You can see blue line is the total return of the S&P 500 and the orange line is the total return of Estée Lauder. And we have a huge difference here. If you look at the last 5 years, it's actually the same trend. We can see again, blue line is the S&P 500, and we had quite a better performance, especially in the last couple of years. And when we look down 10 years, we can see the same. Estée Lauder was actually performing quite well until end of 2021, but after that, we can see that the stock price declined quite significantly. And as of today, we are sitting even under the performance of the S&P 500 over the last 10 years, unfortunately. When we look at the financial statements of Estée Lauder, first, let's look at the income statements. We can see that the sales numbers here are fluctuating. We cannot see any clear growth trend here, but the numbers are seemingly stable on the same level. And the same is true if you look at the operating profit and the net income. What is especially worrying to me is if you look at the margins from 2022 compared to 2023 and the forecast for next year, because the margins have declined very, very significantly. So here is a huge drop, both in net margin and also operating margin. And it's expected to drop even further in 2024. And only after that, it's expected to recover again a little bit, together with the operating profit and the net income. So here we can see that Estée Lauder really is struggling at the moment to keep their sales up, to keep their business going. And if you look down at the balance sheet analysis, let's remove the sales numbers here. We can see also the EBITDA is also very stable on the same level and declining in 2023 and expected to decline even further in 2024, while at the same time, the debt and the leverage of the company is going up. And we will also see this later when we look at the dividend payments of the company. Estée Lauder is really struggling with their cash flows right now. Speaking about cash flows, when we look at the free cash flow and the revenue numbers, here we can also see the trend that the revenue is increasing again until 2021 very roughly, and then it went down, same as we just saw from the income numbers. And the free cash flow has actually been stable over the last couple of years until it suddenly fell off a cliff in the last year. Another number I like to look at, especially for these companies that are focusing very much on merger and acquisition, is the goodwill. And if you look at the goodwill to asset ratio for Estée Lauder, we can see that the goodwill is around 10% of the assets. And for a company with such a strong focus on merger and acquisition, I think this is still in the okay range. As dividend payer, I also like to look at the dividend scorecard from Seeking Alpha for Estée Lauder. Here we can see that the current dividend yield sits at 1.8% around, but the payout ratio is above 120% at the moment. So that means that the dividends in this year are not covered by the cash flow, but they are paid by taking on more and more debt. And that is actually what we just saw also in the balance sheet of Estée Lauder. In the past, the dividends were well covered, and it's also expected to be covered again in 2025 and 2026. But at least for the next 2 years, the analyst expectation is that these dividend payments for Estée Lauder might be covered by taking on more debt. And that is a strategy that I don't like to see so much. When we sum this up by using my checklist, we can see that first of all, the revenue growth of the last 5 years has been quite small at only 2%, and the year-over-year value is even negative at minus 10%. So this is a yellow checkbox for me. The net income growth in the last 5 years is sitting at a minus 14%. The year-over-year value is even more severe. Here we had a decline of almost 75%. So definitely a red checkbox for me. The free cash flow currently sits also again at a negative value, and the growth is also negative therefore. So definitely a red checkbox for me. And because the free cash flow is negative, we also have a negative free cash flow yield. So again, red checkbox for me. We saw that the leverage has increased in the last years, and it's still expected to increase over the next year again. But still, the balance sheet is not too leveraged yet. The debt sits at a 2.6 times EBITDA right now. So this is still a green checkbox for me, although I find the trend very worrying that they even pay the dividends right now out of their cash flow and basically pay it with debt. Estée Lauder is paying a dividend. It's around 1.8% right now. And over the last 5 years, they had almost an 11% growth. So from a dividend perspective, this is nice to see. And here they get a green checkbox for me. Please keep in mind here that the dividend payout ratio sits at 120% right now, which is quite high. And if this trend continues, there might be the danger of a dividend cut in the future. Although if we look at the trends and the analyst expectations, the payout ratio should recover again in the next at least 3 years or so. We also had a look at the margins and and they were also declining over the last couple of years, and they are still expected to decline in the next years. So again, in this case, we also have a red checkbox for me. The overall picture for Estée Lauder doesn't look so rosy, to be honest. A lot of red checkboxes, so definitely a big warning sign already. Before we come to our conclusion, let's have a look at the valuation and the fair value of Estée Lauder. And if you look at the PE and the price to cash flow multiples over the last 5 years, we can see that the multiples have always been on quite a high level. But right now they are also sitting again at a very high level, especially the PE multiple sits at almost 100. Price to cash flow ratio also sits at almost 27, which is very, very high compared to this segment. One explanation for this is that Estée Lauder is a luxury and premium brand, and premium brands usually have a higher valuation compared to their peers. But when also considering the recent drop in fundamentals that Estée Lauder showed, this valuation really seems to be on quite a high level. As a dividend payer, I also like to compare the current dividend yield of Estée Lauder to the historical values. And if you look at the last 10 years of dividend yield, we can see that Estée Lauder right now sits at the top of their values at around 2%, 1.8, as we just saw. And this is definitely higher than every dividend yield that we saw from Estée Lauder over the last 10 years. For my fair value calculation, I plugged in the analyst expectations for the next years, and I also plugged in the PE multiples and the price to free cash flow multiples on a forward-looking basis for this year. And if we plug in these numbers, we can see that the average valuation comes around at $100 with including my margin of safety, and without we are sitting at 116 around. One thing to note about the Gordon growth model, for this I actually estimated quite a bit lower dividend growth numbers than what we had over the last years. And the reason for this is that what we saw just now is that the payout ratio is sitting at a very, very high value. They're even paying the dividends by issuing new debt. And I don't think this is sustainable, and I definitely don't think that they can keep increasing their dividends over the next years, especially on the same level than what they had in the past. When we sum this up, we can basically see that the fair value expectation sits quite a bit below the current stock price of 145. If you do like the analysis so far, please consider leaving a like or even subscribing to the channel. It would help me out a lot. Despite its considerable brand awareness, Estée Lauder has faced recent challenges. Shrinking margins, rising debt, and slowing sales have fueled investors' anxiety and have contributed to a significant decline in the stock price. The current fundamentals do raise concern, and their decline in gross profit, operating income has also led to a noticeable drop in the free cash flow. In the end, this led to a dividend payout ratio of above 100% at the moment. The difficulties in Asia travel retail market might recover over the next years, and the growth prospects are quite good here, even better than the general beauty market. And this sector is very important for Estée Lauder. But with quickly changing trends, there is always also the risk for the big players of losing market shares. And the potential for acquisitions has gotten more difficult for the next years with the rise of interest rates and the degradation of the balance sheet of Estée Lauder. I think at the moment there are just too many uncertainties going forward, and even the valuation doesn't seem to be too low, even though the stock price has already declined 60% from their heights. Therefore, I am not invested in Estée Lauder at the moment, and I also don't have any plan to get invested at the moment. If you have any comments about my analysis, please leave them down in the comment section. What did you like? Do you have any other thoughts about Estée Lauder? That being said, thank you very much for watching, guys, and see you next week.